Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. I wasn't quite ready for that intro to end. All right, Thursday. This week has been going by fast, but December always kind of goes by quickly. And we've had some interesting stuff happening overnight with the Bank of Japan making comments and moving the market. So let me come over here and show you what we're talking about. So here you can see yesterday, I thought, listen, it wasn't like as big as some of these other moves in terms of like the degree of the move, but it was a pretty solid move yesterday. And especially when you look at it from the 30-year, I'm kind of like a little embarrassed that I didn't catch some of that, okay? But we have retraced a pretty significant portion of this overnight, and I'm going to skip over here to the 6J. You can see the 6J coming up really strong here. So the treasuries and the 6J have continued to kind of like decouple, and in this instance, the Japanese yen pushing up kind of, that's like aggressive yields. Oh, ooh, I didn't realize how far behind I was, guys. This is okay. So initial jobless claims in line with expectations at 220K, with continued jobless claims edging down slightly, 1.861 versus 1.91. Might be interesting to see if that continued jobless claims gets a little bit more focused this time, because that is a little bit of a decline where the headline number was in line with expectations. Anyways, coming back over to here. The S&P 500 got hammered yesterday. So as the yields came off, this started to turn into a risk-off trade, as it seems like I wasn't the only one kind of picking up on this thing that, like, hey, the interest rate markets are kind of pricing a recession here. And the e-money is not taking heed at all, so the S&P did take some of those. But, like, look, it's still just back to, like, 45.50. That's just volatility contraction. So I don't know if we can really make anything of that, other than that was the first time in a while that we've seen like risk off movement. You're also seeing it here in oil. Oil just continues to get hammered down, man. And I think that at this point, it's again like the CTAs. Once the momentum gets going, it just keeps going and going and going. Silver and gold continued to, well, actually silver kind of moved a little bit lower, but gold continues to be within the range after getting hammered down earlier in the week. And copper also not doing so well yesterday. Bitcoin finally taking, you're starting to see some weird volatility in Bitcoin, but you know what? That this jump was amazing, and it's kind of like the only thing that matters over there. So that's kind of where we're at. Given this news and everything, or at least rather the reaction to this news, I'm a little curious. I actually think, though, this is a little bit of a risky play that I'm about to list out here, but I think that there's still going to be a lot of people making bets long. Yesterday, yeah, we did have the ADP news and everything like that, but what I saw was a large meta order, a large passive guy that I didn't really detect during the stream in the way that I should have. I'm a little embarrassed that I didn't see that, but it was on the long end. It was mostly on the long end in flattenings, and that's, I think, why I didn't see it. So now we're moving down. I kind of see this scenario where they try and buy the dip. That might happen here in the treasuries. You are seeing some iceberging there at 24. Well, I think this is a little bit too risky to play on my live account, but I will play around here a little bit. at that. So this is just me identifying that there's a possible, like, buy the dip sort of a trade, predicting orders, seeing the iceberging in this area and deciding to execute there. And we did get some favorable aggressive orders there, but it has come back, so we're not in the clear yet. Also having a hard time getting that order at 24 filled, even though, you know, should be okay. Well, they finally did, but they seem to be hesitant to hit it. I don't know. It didn't take too many orders to go through me, and they are looking a little weak at 23.5. I should also note that the liquidity is still pretty iffy, and it's still pretty weak. So, that makes us a little bit more dangerous, right? Come on, come on. No. Oh, yeah, you got a 4-tick winner. Well, it was about average, I guess, but still. Oh, yeah, because you always trade oil. Wait, so why are you not? Is oil gotten too crazy for you, Kevin? But yeah, I mean, I'm doing it on a sim account, but I am trying to scalp out this range to see if I can build a see if I can build out a position that I can let run long. Oh, am I thinking of somebody else? I only traded ES. Well, moving from ES to ZN, that's a good move. Whoa, hold on. Forgot to turn the speakers off. Kind of feel like, I don't know. I kind of want to get a new audio interface. Maybe that'll be the next purchase for the stream. I don't know. Kaluta's trading oil. So, there's this, oh, I think it was a pro story, so I won't read it to you guys, but there's a story on ZN, basically going through some of this data that you get from, like, Goldman Sachs, that goes into, like, what hedge funds are doing and so forth, and basically what they were showing was that the hedge fund world has, they're almost all becoming CTAs, essentially. That even if it's like stocks, they are all crowding into the same stocks, that they all ended up in those same few tech plays, for instance. And so hold on a second. Do I want to? I think I want to let these two contracts run a little bit more than that, since I've got my cost basis below the low. I think I don't need to take off the second contract. I can kind of let that run. Okay, anyways, so they're saying that they're seeing strong crowding effects, and so, like, they were all owning those big, the Magnificent Seven, for instance, and that, like, the AI plays, that it was like 99% of them were in this AI NVIDIA play, for instance. And what it's doing is it's creating this convexivity that makes the markets very fragile. Basically, we get these huge swings. It's also leading to these hedge funds underperforming. That because they're all chasing it, basically, it's only the people that get in early that make the money. And the hedge funds, you know, because they have so much money that they have to get in as they're chasing the momentum, they don't make very much. They underperform. So it's actually to our benefit if we have really good CTA strategies where, you know, we can really see that momentum and that shift, then we can make money off of it. I think I should have been more aggressive than I have been on this like move up, right? The trend is just really strong right now. And that seems to apply particularly strongly to oil. Man, this turn in oil that we've had down has just been brutal, and I really don't feel makes a whole lot of sense. It really does not make a whole lot of sense to me. Like, I get the skepticism over whether they'll hold the output cuts and all of these sorts of things, but if we're not moving into a recession, I don't see why oil should be moving down as much as it has. And everybody's been doing their best to try and show that they are going to be holding to the OPEC targets and that they support it and everything. So it's just a little bit bonkers. And I think that the only explanation for it is extreme momentum being created by the CTAs. So if you're in oil right now, you know, that's the place where like the crazy stuff is happening. You know, I'm sure there are some people in oil that have some that have done really, really well and some that haven't. Because like if you see the shift and you just run with it, then you just make a ton. Right? I think here in the Treasury, I think we have had that, but it may be starting to even out. Of course, if we get a weak number tomorrow, these treasuries are probably just going to rocket up a little bit more and then probably quickly reverse because just everybody's been long, right? But it's all very curious. But if you're trading ES, man, I feel a little proud that that we got Kevin trading treasuries and his first trade was a winner. Although I always kind of caution, like the worst thing that can happen to you is to have success right away, right? But more people I can get from ES into ZN, I think that that's a win because I think that ES is mostly noise and that there's probably more edge in it for traders, for retail traders trading the treasuries. Jiwi is from Croatia. But you don't live in Croatia right now, though, right? I'm not moving from ES. I just want to see if I can trade more markets. Well, that makes a lot of sense too. I feel like that to trade multiple markets, that you need to have a pretty decent WAD. But if you can just play the CTA game and swing between them, then yeah, that's a great game. It works best when it's quantitative easing, but it seems to be working really well now just because of the way that, because of the strategies that professionals are using. I mean, it's kind of funny because it's just what we've always been saying, right? Is that your orders have an impact on the market, and there's kind of like this ongoing metagame where everybody starts using one strategy, and then that makes that strategy less effective, right? So the big question that I have is like, what is the counter CTA strategy, right? What is, when everybody's using the CTAs, what is the strategy that you can use to take advantage of that? Well, I think that for now, if you can detect the turns before the CTAs really jump on them, that's probably the best thing. But I think that as time goes on, probably that will come out too, and there's got to be a counter strategy to it. Perhaps some sort of a mean reversion strategy to the CTAs. You know, I know for one thing that the most successful CTAs that I've heard, like Jean-Philippe, for instance, say that you need to have a little bit of mean reversion in your strategy too. So I don't know. Oh, you are in Croatia right now. Okay. You know, so there was a Republican, that just reminds me, there was a Republican debate last night. I did not actually watch it. I did not realize that it was on last night until it was basically over. But there was this whole thing about, like, can Nikki Haley list 3 sections in Ukraine? And I'm kind of like, well, I think I can name 3 areas, because there's Kharkiv, there's Mariupol, and then there's Donetsk, and those are kind of been the 3 areas that have been under the most, like, what would you say, dispute, right? I don't know what these are called. But now you're talking about Croatia, and you're like, I don't know if I can point it out on a map. There it is right there. I know it's in kind of Eastern Europe. I didn't realize that it was on the sea. That's interesting. But right next to Bosnia and Serbia. Oh, I didn't get filled there at 30? Well, I really don't like you're like 1 tick away and then they yank it away from you. That's annoying. Almost visited Croatia last summer. Did a short Balkan trip. Stopped at Montenegro. Tell me, are like the what do we call it? Is the French Riviera really as great as they make it out to be? 'Cause I kind of always thought, oh, you know, that's just the best that they had in Europe. It's not actually that great. But now I'm starting to see stuff on, you know, Rich Talk or whatever you want to call it. And it looked pretty nice. It looked pretty nice in the French Riviera. If I really wanted to get filled, why not just market order in? Totally. I think that if I had been paying attention there a little bit more closely, that when I saw it come back there, that I might have hit into 29. But look, I did get filled there. So this trade is working out almost perfectly. Almost a little bit too perfectly, right? I was able to predict almost exactly what they were able to do. And the iceberging that I saw there at 23.5 was the bottom. So the kind of the structure that I used to get in also worked perfectly. I didn't have any adverse excursion. It just went. I was able to say, oh, you know, I've got 2 contracts. Let's let the second contract take it off. When I took it off at 30 just because that was the node in the volume profile. So I'm like, okay, if they come back up there, it hasn't been very long, so there probably will be some activity at that area. That would be a good spot to get out. Now I can let this last contract ride. Do you think that we'll get to yesterday's highs though? Because I'm a little bit skeptical about that. Little bit skeptical of that. But 111. So just remember that 111 was like, okay, that was like the key spot. And then there was like the breakout, and they went beyond that, and then they went beyond that again. And I think that we got all the, well, let me look at the chart. Let me look at the chart and be sure. 09.5. Yes. Okay. So they got as far as this, which I can't see. Okay. So let's change this again. I can see 20. Let's change it to 25. I don't necessarily want to show like as many as I can on this. I feel like that's wasting CPU. I guess it doesn't really matter because I have a much better CPU. You know, we haven't even kind of come in and profiled this, but like, I come and look at this. Okay, well, I have the same amount of memory as I did before, so it doesn't surprise me that I'm using 50% memory. But 20% CPU utilization sometimes? Yeah, should be good. Can probably push it. But I think I'm pushing it by having oil up there, right? Back to trades, quotes, and prices. I can't believe what an eye-opener it is. Wow. Right? I'm telling you, like... Newsquawk's saying something. Yeah, Kulud smiles because Kulud was the one that recommended the book to me. So... The thing about the book is this. As a trader, you have these questions. There's these spots that you kind of come to that you're kind of like, is it this or is it this? Right? One of the key ones that I talk about is that if you have a technical strategy and you trade on it, it removes it from the market on average. And like, how big can you actually get? How do you deal with the sizing? Why is it that trading is so effing hard? And there's just kind of all these questions about like, what is the fundamental nature of this thing that every trader kind of has theories on, but once you've been trading for a while, you kind of realize that you don't actually know. It's like you learned these things from other people and you don't actually know, and you know that like most traders are losing money, so like, what actually is the truth, right? And then when you read trades, quotes, and prices, they go through and they prove empirically that what the market is doing at the very base layer. And it's not just that it's like, oh, okay, now I understand what's happening at the most granular level. That's cool and all. But what happens is they're able to turn around and say, these are the impacts that they have at the meso and macro level, essentially. And then once you take it up to there, then it's like all of these mysteries that you had wondered the whole time that you were trading are demystified. Like, it becomes clear. I think one of the ones that always messed me up the most, that I had the hardest time trying to deal with, and you can see this in my earlier streams, I was always talking about this, is it's like, we're moving up, and then I see an iceberg. Okay, that's 3,000 contracts on the offer that absorbed at 11. But that's also 3,000 contracts of market orders that were willing to hit into it. And there's two sides to every trade. So if I'm sitting there and I'm going like, are there more buyers than sellers? Which side is going to win? Is it going to be the market orders or the limit orders? And I never knew who to go with, right? Well, in trades, quotes, and prices, then they start talking about the Kyle model. And in the Kyle model, it separates the market between market makers, noise traders, and informed traders. And it kind of assumes in their model that the informed traders are using market orders. So we actually know that the informed traders use a mix, about 50-50. Okay. But it is really those market orders hunching through the limit orders that determines where price goes most of the time. And yeah, the limit orders can cancel and the limit orders can stack, but the market orders are the most instrumental. And so once I understood that, and I realized that, oh, like, cumulative delta is literally this, probability of informed trading that they're always talking about. This is just like the live version of it. And watching what that cumulative delta says about the informed trading in the market. And it's just all very clear. And once you start watching the market with that kind of approach, that like there's informed traders out there, and then there's the market makers are using limit orders. It all makes so much more sense, I think. It is not easy reading, but I feel like that if you're going to trade, you have to read that book, man. Like if I was starting a firm or a trading desk or something, I think that would be required reading. It was recommended to you by an oil market maker. Huh. There are also other good articles. You know, I never, so all of the people that were in that book or that helped write that book definitely have like big studies worth reading. Oh, the title is Trades, Quotes, and Prices, Financial Markets Under the Microscope by Jean-Philippe Bouchot et al. And Bouchot is spelt in a way that you would never expect from the spelling. It's like Bouchaud. Okay, so they are extending a little bit above 11 here. Yeah, I thought that it was like pronounced Bouchard or something. Just warning you. It's not light reading. Okay. It doesn't look like a huge book, but it actually is a book that'll probably take you like a month to get through. When you get to the end of every chapter, there's like these long, can you see that? Those are all of the citations, studies that they're citing as evidence for what they're saying here in the book. So like, dude, if you went through and read every study that is cited in here, you know, that would probably be a couple of years worth of research. And then like real math, man. Can you see the equations and stuff? Graphs and stuff? Had a good study. You know, I remember there being a couple of studies about head and shoulders patterns. There was one that was like from the Federal Reserve that kind of said like, well, it seems like there's something to this, but it doesn't look like trading this actually makes you money. But then there was other ones. Anyways, I tell you what, most books about trading are just trash compared to this book, because most of the books that you read about trading are like, okay, here's this great pattern that I really believe in, and I'm going to explain to you why I think it works. And usually their explanation as to like why they think it works is very simple. It's something that they could actually describe in like one chapter, right? And then the rest of the book is just them running through different instances of this pattern and describing in text the pattern, which can be incredibly difficult to follow, right? Without like constantly referring back to the chart. And of course, the chart is always on another page, right? They're just filling pages. It's because they don't actually have that much content. And so they're just kind of BSing stuff to make up, you know, enough for a book that somebody will publish it, right? Whereas this book is so information dense. It is so information dense. You really, after you read it, you're not going to want to just stop. You're gonna start going and finding these studies that it's talking about and reading those. And then the really amazing thing about it is that once you've read that book, and if you really study it hard, now you have this base level of knowledge that allows you to actually understand the other studies that are coming out right now. In fact, I haven't done this in December. Let's go. Oh, you know what? I have to... ARXIV quantitative finance. you come here to archive, quantitative finance, and there's a trading and market microstructure, current month. And every month, there's going to be a few dozen studies about this stuff. So look at this. Insider trading in discrete time Kyle games. So the Kyle model was about insider trading and in a I forget what it was. I forget what the title of it is. But so they're almost certainly talking about the Kyle model. I wouldn't know that if I hadn't read that book, right? Let's come in and look at it and see what we present a discrete time version of Kyle's classic model of insider trading. The model has three kinds of traders: an insider, random noise traders, and a market maker. The insider aims to exploit her informational advantage and maximize expected profits, while the market maker observes the total order flow and sets prices accordingly. First, we show how the multi-period model with finitely many pure strategies can be reduced to a static social system with a sense of debris. I don't know what that is, okay, and prove the existence of a sequential Kyle equilibrium following Cripps and Wilson from 1982. This requires no probabilistic restrictions on the true value, the insider's dynamic information, and the noise trader's actions. In the single period model, we establish bounds for the insider strategy and equilibrium. Finally, we prove the existence of an equilibrium for the game with a continuum of actions by considering an approximating sequence of games with finite many actions. Because of the lack of compactness of the set of measurable price functions, standard infinite dimensional fixed point theorems are not applicable. So there's a bunch of math stuff that I don't understand, but I know the context of it. So I could go through and I could read that study, and I'd probably have to look at a couple of citations and so forth, but then I would be able to understand that. I wouldn't be able to understand that if I hadn't read that book. Oh, is that all we got for this month, huh? Usually there's more than that in a month. Let me go back and just do recent. Crypto wash trading, direct versus indirect estimation. Okay, so here's another one. You know, I'm talking about the square root law all the time, right? The two square root laws of market impact and the role of sophisticated market participants. The two. Oh. I might learn something from that. Benchmarking large language model volatility. That sounds interesting. A simulated electronic market with speculative behavior, and that sounds interesting, right? Like, dude, this will keep you going every month, right? So I think sometimes you're sitting there thinking, well, I feel like there's more I can learn about the market. What can I do? And of course, I'm always saying you need to do your own research. Well, where are you going to do your own research? Well, this is going to give you the ideas. You look at what other people are doing, and then that'll give you ideas of things that you can try and look at that might be able to find, you know, more edge for you. Because these guys, they're looking at it mostly from a theoretical and mathematical perspective, and like what's interesting for them, not necessarily like what would be the most useful strategy for a retail trader, right? But if you understand this research, you can do that part on your own, right? I actually worked out really well. It's kind of funny that the first thing that was in there was about the Kyle model, and that was the one that I gave as an example of something I learned from the book that's really useful. Right. And the wild and insane thing about it is that this is the whole academic world for trading in market microstructure, and retail traders don't know a darn thing about it. I am literally the only person. I'm literally the only person in the retail trading space, certainly in the futures retail trading space, that talks about this sort of stuff. Yeah, there's people that talk about quantitative finance, but they're usually talking more like statistical arbitrage and correlations and stuff, and not market microstructure. I am, as far as I know, the guy that introduced YouTube to market microstructure. And it's just insane to me that that's me. That nobody else has done that. Nobody else, even still, a year or two later, even still, nobody else is talking about this stuff. Because if you go to an institution, this is what you're talking about. Isn't that crazy? You think that maybe there's some useful stuff in there? I think so. I think so. Let's read these. I want to know, what is the 2 square root laws? The goal of this paper is to disentangle the roles of volume and participation rate in the price response of the market to a sequence of transactions. To do so, we are inspired by the methodology introduced in these 2 other papers that they don't have the titles of, but they just link them, where price dynamics are derived from order flow dynamics using no arbitrage assumptions. We extend this approach by taking into account a sophisticated market participant having superior abilities to analyze market dynamics. Our results lead to the recovery of 2 square root laws. 1, for a given participation rate, during the execution of a meta order, the market impact evolves in a square root manner with respect to the cumulated traded volume. That's the one that we know about. For a given executed volume Q, the market impact is proportional to, I forget what the funky Y is, lambda or something like that, where it denotes the participation rate for Y large enough. Smaller participation rates induce more linear dependence of the market impact in the participation rate. Oh. So the more people, the more of the market that is participating at that time, the more of a square root law you get. Whereas if they're executing a large meta order and there's not a lot of participation, your impact becomes a little bit more linear. That's useful to know, actually. And I totally see that too. That it's like these ones where it's like, doesn't seem like there's anything going on, and like the activity in the book is like really sketchy, but it is moving up. Those are the ones that just keep going and going and going. Ah, okay. Somebody executing a meta order when there's not a lot of participation, they have more impact. Gotcha. I think that's what that means. It's a difficult topic to follow. It's not light reading. It's not. It's not. And this, again, comes back to the subject of developing your mind, right? It'll always come back to, you realize, so here on this stream, it'll always come back to like one of 3 things. The market is competitive, right? The markets are very statistically efficient and not very informationally efficient, and that your mind contains a neural network that you can actively develop and influence with what you are consuming, what information you're consuming. So yes, if you consume trades, quotes, and prices, financial markets under the microscope, when you start out, man, I tell you what, it's not going to make any sense. Just keep pushing through it. Make sure that you understand the main takeaways that they get at the end of the chapters. Try to understand the math as best as you can. When you're done, go back and say, okay, here's one model. The Kyle model is a really good example. I want to make sure that I understand the math of the Kyle model. I want to make sure, like memorize formulas and things like that. Start reading other studies about this. And as you consume that data day in and day out, your mind will become more efficient at being able to read it and understand it. And before you know it, you'll be a full student of market microstructure. But part of it is that there's kind of like this learning curve at the very beginning that most retail traders don't push through because they don't know. I think that if retail traders understood how important, that's the thing, is that like, surely other retail traders have come across this information before, but it was like they didn't understand it and they read it and they moved on. Because that's what happened to me at first. Somebody gave me the Almgren Chris paper, And I read it and I'm like, okay, seems interesting. I don't get it. Like, I don't understand the significance of it. I didn't understand the significance of it. It was because my brain was not ready for it, right? Did not know enough, and it was not trained enough in all of this math and all of the context and everything to even understand why Holmgren Chris is significant. That minimizing the impact of your trades and how your trades affect the market liquidity improves your execution more than all of this other nonsense. That's a huge result. It changes everything for these people that are executing lots of volume, right? Reading the book got me there. So if retail traders understood the importance, then maybe they would try harder to get over that hump, right? Most people in retail think it's easy to trade and not necessarily to read stuff that will complicate it. Yeah. Well, you notice that when you go on Reddit or whatever and you talk to successful traders and they're like, it's really hard and it's a lot of work and all of these sorts of things. And then you're going and you're trading and you're like, okay, but it's just following these moving averages or looking for price action patterns, or, you know, the stuff that people talk about is actually stuff that, you know, if it really worked and you knew what worked, you should be able to explain to somebody else in 5 minutes, and it's not actually that complicated at all, right? But then you get into the market microstructure area, and all of a sudden it's like, okay, like this stuff actually is very useful, and it is like a whole semester's worth of studying stuff. This is like, there could be a college course, and that would be the book. And it's complicated. Once you have all of that stuff, yeah, some of the mysteries of the markets are revealed to us. And that's how I'm able to come in and talk about some of these things very confidently, to say, well, right now CTA seems to be the strategy. It is having an impact on the markets, and it's causing the swings in the market to be much more extreme than they otherwise should be. It's also causing hedge funds to underperform. And we understand the dynamics of like how that happens and why that happens. Orders have a strong impact. Whereas most retail traders isn't like, okay, hedge funds doesn't have anything to do with me. What about this head and shoulders pattern? Right? Ugh. It's funny because when I talk about something like that, you know, I'm always like thinking, well, you don't want to oversell stuff. The thing about the scientific research is that what you can prove with one individual study is really quite narrow. But the significance of it, I really don't think I can oversell it. I really don't think I can. Well, there has been a little bit of activity above 111 even, but it seems to be pretty even here at this point. And when I look at cumulative delta, it definitely does look like there was a meta order long from about where we got in, and they took it off at 111. So I'm not so sure that I'm going to get another leg here. I kind of think that this trade was a little bit opportunistic. So I think, yep, there was my fill. So I'm going to exit that position. Doesn't mean that it's going to come back or that it's not going to move up. It's just, that seems like that's the only opportunity in it based on the reasons that I took the trade. There could be more meta order to come that I don't know about, and it keeps pushing, right? Well, we had that early trade, and then we got into that discussion about market microstructure so early that we haven't really kind of browsed around and seen what's going on Twitter and so forth. Not that anything super interesting happens on Twitter anyways. John Reed Stark criticizing Bitcoin. It's always better to discuss market microstructure. Yeah. So super important. Yeah, not a whole lot from there. Let's come over to Zero Hedge and see what they got on Zero Hedge. Final debate postmortem. I'm kind of don't really want to read a whole lot about the debate. I kind of want to watch it without getting stuff, but kind of sounds like the debates are kind of proving to be useless because nothing's happening in there that makes people think, oh, I'd rather have them than Donald Trump. And really sounds like, yeah. I mean, it probably, you know, I kind of feel like that if Donald Trump was in the debates, that maybe things would be different. Like it would maybe have hurt him. So it would have given somebody the opportunity to really stand out and outshine him. And that would have been devastating to him. But nope, he just skipped it. Was the right play. Jobless claims data surges with seasonal hiring at decade lows. Washington Post reporters launched 24-hour strike. Okay. GameStop shares plunged 7% after revealing bizarre plan to allow CEO Ryan Cohen to invest company cash in equities. So GameStop is now a hedge fund question? Yeah. Dude. So what I'm saying about, man. So if you haven't noticed, I'm a little bit triggered about the GameStop thing because when that happened, we got a huge influx of people, audience coming in, interested in learning because of the GameStop thing. And then when I got out of the position, they all just disappeared. They weren't interested in it anymore. And GameStop turned into a cult after that. Of people that are just holding it for forever and are convinced that the mother of all short squeezes is going to happen someday. Yada, yada, yada. It's sad to watch. And GameStop had a really, you know, when you have a market mania like that for your stock, like that's a huge opportunity for you to, like, you know, that gave GameStop a second life. And this Ryan Cohen guy, I really think he blew it. He didn't do jack squat. GameStop still sucks. You just go to your local, you know, if you have one in your area, just go and visit the store and walk around. Ask yourself, is this actually a business that you really see sticking around and going somewhere long term? And them saying they're going to allow Ryan Cohen to invest company cash in equities, that's kind of an admission that, like, we ain't got nothing. Okay, let's read the jobless claims one. After an ugly JOLT sprint and a disappointing ADP report, the headline jobless claims data comes to the rescue of the Goldilocks narrative. Initial claims were flat at 220K, but on a non-seasonally adjusted basis surged, driven by a plunge in California. Continuing claims tumbled back below 1.9, but on a non-seasonally adjusted basis also surged. But it's seasonals, we hear you cry, true, but for both initial claims and continuing claims, last week's surge is early and large. In another sign of a cooling labor market, the executive coaching firm Challenger, Gray and Christmas Incorporated, said U.S.-based employers announced 45,000 job cuts in November, which was lower than the same month a year ago, but a 24% increase from October. Seasonally hiring is also at its lowest level for this point in the year in a decade, according to a separate report. The job market is loosening and employers are not as quick to hire, Senior Vice President Andrew Challenger said in a statement. The labor market appears to be stabilizing with a more normal churn, though we expect to continue to see layoffs going into the new year. Is it different this year? Is a year-end firing spree lost in the seasonals? Is what Zero Hedge asks. So that's interesting. So I wonder if this trade, so I came in with the thinking that, okay, they sold on the initial news, but it was in line. I don't really see a strong reason for this to turn into that it really changes the picture. And we know that the market is long, the CTAs are long and everything. So they're probably going to take that as an opportunity to buy it back up. And that's why I bought it back up. But now I'm reading Zero Hedge and they're saying, well, hidden within the numbers, there's perhaps something to suggest that there actually has been a layoff spree lately that is kind of being hidden by seasonals. And that would have been a reason to reverse that trade as well. So, this is why we read these things, folks. I'll leave that Zero Hedge story up there just so that I will remember to go back and read it. Do I follow John Reed Stark? I think I do. I think this is the guy that, used to be former chief of SEC Office of Internet Enforcement. So I don't think I'm going to read this whole... No, I'm not going to read the whole thing because it's pretty long. But he's pushing back against certain narratives. So, number 4, this is rogue regulation by enforcement. His response, no, it's not. It's just plain old SEC enforcement. With every new high-tech advancement, those whose behavior was questioned have quipped, why didn't the SEC tell us that this behavior is illegal? They argue that if there is no black-letter rule, the government has failed to provide fair notice and violated hallowed due process rights, reflecting a misguided or even nefarious bureaucratic proclivity to expand power and broaden jurisdiction. Oops, there we go. But the SEC's approach is rarely improperly expansive, nor does it involve rogue SEC enforcement efforts or a lack of fair notice. Rather, the SEC typically adopts a reasoned, common sense application of the basic requirements of the federal securities laws to new and evolving market conditions and technologies. The same goes for SEC efforts relating to crypto and all the rest of the increasingly dangerous Web3 variants, many of which threaten not just individual investors but all global capital markets. Like most laws on the book, regulatory clarity is an anathema to securities regulation, which is rarely prescriptive but is instead all principles-based legal framework, intentionally drafted to be broad and all-encompassing. Clarity is not just uncommon, it is deliberately avoided. That securities laws on the book adapt well to technology should come as no surprise. They were drafted with that specific notion in mind. Consider a 1989 case captioned Reeves versus Ernst & Young, where the Supreme Court stated in an opinion written by Justice Thurgood Marshall, in defining the scope of the market that it wished to regulate, Congress painted with a broad brush. It recognized the virtually limitless scope of human ingenuity, especially in the creation of countless and variable schemes devised by those who seek the use of money of others on the promise of profits. For Reeves and countless other precedents, judges have agreed that Congress never meant to cabin the scope of securities regulation, but instead crafted definitions to contemplate not only known securities arrangements at the time, but also any prospective instruments created by those who seek the use of others' money on the promise of profits. Yes, he's totally right. Like when they come in and they say, the SEC doesn't have any jurisdiction here, or the SEC is being unfair. And I always look at this and I'm like, no, it's the rules are very clear, like what their intention were. And what you're doing is very, like, I think that the best example of this was when Coinbase had like their crypto lending platform, right? That's a security, dude. It's they're auctioning off bonds, and there are reporting requirements on all this stuff for it. And they say, well, because it's crypto, it's different. No, it's not. It's a freaking bond. It meets every definition of a bond. And I guarantee you that if you take this to court, that you'll lose. And they tried to gaslight everybody about it at the time. And I remember arguing. This one kind of pissed me off now that I think about it, because I remember there was this one guy. It was like I came out and I said, I guarantee you they will not take this to court, because any lawyer worth his salt will tell them that they're going to lose. And then there was this lawyer, this crypto lawyer guy that had a pretty big following that was like, no, this is, they have a slam dunk case that the SEC is overstepping its bounds and yada, yada, yada. Well, Coinbase dropped it. Coinbase dropped it. Anyways, I like this guy. He really does understand what he's talking about. And I am really concerned about the damage that the cryptocurrency market could do if looks like we're on the beginning of another mania. Okay. Enough to Reddit, I guess. We are falling back down a little bit, so it looks like my exit there was pretty good. The GOP just conflated anti-Semitism with anti-Zionism, and that's problematic. So, Zionism, a movement for the reestablishment and now the development and protection of a Jewish nation in what is now Israel. Yes, I believe that Israel is a nation. They deserve to be there. Or I mean, it's already happened. You can't kick them out. And I think that we should protect that. Yes. So I guess that would mean I support Zionism with that very limited definition. So if you oppose that, is that anti-Semitic? Well, I think that if you oppose Zionism, I don't see how you can how opposing Zionism doesn't end up being advocating for genocide. Quite frankly, I mean, if you support a two-state, because Zionism is within the bounds of a two-state solution, right? Well, there should be an Israeli state, there should be a Palestinian state. That's fine. But if you oppose Zionism, that means that you think that the Israelis should be kicked out and that the whole area should just be one country ruled by Palestinians, basically, because they'll be the majority of the population. And that would result in the extermination of the Jews. There used to be Jews in all of these Arab countries 100 years ago, and they're not anymore. Yeah. So I don't see how you are pushing this narrative without it being anti-Semitic. Yeah. Well, I'm going to read this because it's like of course it's MSNBC. So like when just the title of it kind of makes me go like, that's very, very wrong. That's kind of a sign to me that like I should probably read it. I'll read it to myself here though. Oh, the resolution contained controversial language declaring that anti-Zionism is anti-Semitism. I don't think that criticism of Israel is anti-Zionism. I'm interested to see what people in this thread are going to say about that. Is anybody gonna hit in on the definition? Oh, somebody actually does. Okay, I'm pleasantly surprised by Reddit. What does Zionist even mean? I thought it meant support for a Jewish state. Or does it mean today the expansion is foreign policy of Israel? Champagne Yakov, it can't be jobless claims and moving rates like this. Perhaps the Bank of Japan skewed positioning? Oh, I don't know about that, Champagne, because, you know, the move that we had from 111 down to 23.5 and then back again, I would say that is a big move for a inline number, but it is not a big move for jobless claims in general. So I do think that it was jobless. I think the way that the market moved made total sense. And, you know, like, markets will overshoot or undershoot what the fundamentals suggest, because it has more to do with orders and the market liquidity. And, you know, the market liquidity is still testy, and it was a decent amount of selling that came in there. But you can, you know, it was really interesting how that iceberg down at the bottom just all on its own seemed to be the stopping point and pushed it back up. So now the Bank of Japan thing overnight, that is also very interesting. How much the Bank of Japan is decoupling from the treasuries now. So we're in a completely different environment for sure than we were a couple of weeks ago, where it was like every time that, you know, things were going bad in Japan, that was pushing the treasuries down and hurting the interest rates and so forth. That is a positive development, because the dynamic that we were getting before, that could have led to a real disaster if it had kept going. By the way, I should also note that we are getting a pretty decent rally in the treasuries in the equity indexes since the jobless claims. Market does seem to be reading the jobless claims as also dovish. Because kind of when you dive into the crosstabs and so forth, but the E-mini is always doing zany things, and I think that a lot of this is just the mean reversion. Like we had a big drop yesterday that gonna revert back to where they are really easily. Yeah, that seems so good. Okay, I was writing a post here on Reddit. I'll read it to you. Notice how the article is preemptively trying to shift the definition of Zionism from the top dictionary result on Google, which means the definition of a movement for the reestablishment and development and protection of a Jewish nation in what is now Israel. And now they're trying to change it to anti-Zionism means the criticism of the Israeli state policies or its ethno-state ideology. Why would anyone want to co-opt a word that traditionally means that you oppose the development and protection of a Jewish nation? Seems telling to me they might not be anti-Semitic themselves, but it sure seems like they're trying to cover for anti-Semitists. That's what I wrote. Not that you care, it's not relevant to the markets. We are back to 111 again, by the way. So, small little pullback. It's nice being done for the day by the equities open. Probably is. That trade that we got on the reversal, I mean, that was the easiest reversal trade I've seen in a long time. Usually, reversal trades are super, super hard and scary, right? I guess I didn't take it live, so that tells you something about it. Was a little nerve-wracking. Looks like it could have been worth almost $20-$30 if I had taken it live too. So, but you're right. Now that we're pinned at 111, equity markets are reverting because of what appears to be volatility compression and mean reversion. Probably means that the trades from here are going to be a lot more difficult. The treasuries could still continue to rally and try and recover some of what they lost in the overnight, but I think that things are going to be pretty tight. Jeez. So something else that's going on, affects me greatly, was I got a letter in the mail yesterday from my healthcare providers saying that they're no longer going to cover one of the medications that I do. So I'll tell you about this. Usually you don't talk about your medications, right? But I take a medication called Lialda that helps put my ulcerative colitis, which is a inflammation in your colon, puts it at bay. And the whole thing is that the medication, it has a delayed release, so it doesn't get released until it's in your colon, so that the medicine gets delivered to where it needs to be. And they've got this special matrix activation technology. It doesn't get activated until it gets touched by certain chemicals in the colon. Well, it's like a $1,000 a month medication, so insurance companies don't want to cover it. And I've always been able to work the system and get the insurance company to do what they're supposed to do. But now they're saying, like, we're just straight up not going to cover it. I could still potentially get them to cover it. I don't know. I don't know where it goes. So I started a thread on Reddit, and just reading the stuff about it is just really sad. This person, they priced me out of it years ago by making it the most expensive tier. It's what caused my flare that has lasted over 4 years. I missed a refill after 17 years of remission and went into a flare within that month. Have been through 6 meds trying to get back to some kind of normal, and the inflammation calmed down. It's down to mild, but finally. A year on Rinvoq and cholesterol climbing has the doctor sending me 2 trials. Be changing again in a couple of weeks. Can you believe that? They have a medication. It works. It's the only thing that works. And the insurance company has found a way to say that we're not going to cover that. Total bullshit. It's total bullshit, right? Because the way that they do it is they say, well, we're not going to pay for the prescription medication because there is another medication out there that you can use that's cheaper, is what they say. The problem is that generic doesn't work. There are factors outside of the formulation that affect the efficacy of the medicine, namely the matrix coding in the prescription. In the name brand, that the generic doesn't have. And only the formulation is what is determined when you say something is generic or not generic. So you have this niche area where the insurance companies can screw its customers over, essentially. Well, should there be a lawsuit? I don't know. My understanding is that there are some states that they have laws that basically force the insurance company to still carry it or whatever, still cover it. And my understanding is that you can still say, like, even though this is excluded, we can come in and say there are factors beyond the formulation that make a difference for this patient. Yes. But there is also one other name. There's one other medication they haven't tried before that sounds like it would get the medicine to where it needs to go. So we can try that first. I think I'd try that first before I start fighting the insurance company, right? So something that happened to me this last time around was they said, we're not going to cover it. I had my doctor send in, this is a prescription. This is why we need to use the name brand, etc., etc. And they rejected it. So I appealed the decision. And then I started calling the person that's like looking it up and everything. And once you get to the person that is in that department, and there's like 2 or 3 of them for the whole insurance company, there's like 2 or 3 of these people. Okay. But once you get to that guy, oh man, he knew shit. He knew the system, man. And he told me exactly what to say. It's like the language that I'm using. I'm using very specific, because not that any of you guys would have this problem, but anybody out there that you have ulcerative colitis, Lialda, or some other medication that your insurance company is refusing to cover, this is the language that they're looking for, is that there are factors outside of the formulation that affect the efficacy of the medication for this patient. So you could maybe, there could be other things, like they could be allergic to a certain coating or something like that, right? But you get the doctor to put that in their request, and then it just gets automatically approved. He told me exactly what to do. So I think that I could push it and do that. But should there be laws? Like should the law be changed here? I think so. But also, this medication shouldn't be that expensive. I do wonder if, because United Healthcare is like the largest healthcare provider in America now, aren't they? If they're not doing it, who is this company selling this drug to? At that point, right? Maybe they bring the cost down finally. Let's see. But I got that on my mind because, yeah, if I go back into having flare up and so forth, really will affect my energy levels and everything else. And it's harder to get good work done. And it affects the trading. So, why is there a dovish tone towards jobless claims? Well, the jobless claims, the headline number came in line with expectations. The continued jobless claims came in under expectations, which is perhaps why the treasuries sold off after the initial release. But once you start to look at past the headline numbers and you look at where the claims are coming from and what the seasonal adjustments are, and you realize that this was actually a very weak report, kind of suggests that we're getting more layoffs in this time of year than ever before. And it's just because of the seasonal adjustments from last year and so forth that it doesn't show up as an alarming number. So if you go to Zero Hedge, they have a story about it. Jobless claims data surges and falls with seasonal hiring at decade lows is their story. And they kind of go a little bit more into detail with it. But you know what? Like this is kind of like, yeah, they moved on the initial news and then they decided that news doesn't really matter. I always got to think of it from the perspective of flows, right? The naive approach to the market is, piece of news comes out, all market participants look at that piece of news and then decide where the new fundamental value should be, and then they start trading it in that direction. That's not actually how the market works. The way that the market actually works is the traders see the piece of news, and then based on the piece of news, they decide to buy or sell. And the amount that it moves is dependent on how many people decide to buy or sell. And it has absolutely nothing to do with the fundamentals. And that is why when you go and there's many, many research studies about this, they say, how far should the market move based on the fundamental piece of information that was just released? And it is always either too far or not far enough. It's because it's the orders that move the market, not the fundamentals. Okay. So, an event like that caused a lot of orders, but it kind of seems to me like the market is suggesting that from a fundamental perspective that it's all a wash and it doesn't really matter. And I mean, why wouldn't it? Because we got non-farms tomorrow. And after non-farms, like everything else is just going to seem insignificant. So. Okay, so here's another thing that I was doing on Reddit. This person said, in the trading world, where we actually do not have honesty. Why would you say it like that? Okay, anyways, apart from the online gurus who sell the false representation of trading lifestyle, yes, I believe they make their money from signal courses, marketing, etc. But even the so-called I know it all in this sub knows deep down they're not making anything from actually trading. With all the trading strategies in the world, not a bold enough trader to take solely profit from creating a PAM service out there. This guy's first language is clearly not English. So I responded and I said, probably most people dispensing the advice are being genuine. The problem is people don't realize how much data is required to make a conclusion on strategy. They get excited about a few months of success in an industry where performance is judged on time spans of 5 to 30 years. Let's see here. I believe you're correct. There are a few bad eggs in the industry, but the vast majority are decent. I think the biggest issue is trading is hard and most people fail. So if an internet YouTube trader sells a course or a Discord service, etc., and 95% of the people lose money, that is about on par for the industry. The issue is many of the people who fail don't want to blame themselves. They want to blame the course and say that the market is rigged. Well, no. Well, the reason that happens is because trading a strategy impacts the efficacy of the strategy because all orders have impact. If trading a strategy makes a strategy not work, does that mean you need to make your own strategy that is new and different from everyone's? Basically, yes. I mean, there are some inefficiencies in the market that, are maybe still there and they haven't become popular enough. But like, I believe that that's what's happening with CTAs right now, is that the CTA strategy, taking advantage of momentum, was a very profitable trade. And so everybody on Wall Street is now trading that. And because of that, it has changed the behavior of the market in a way that is not very favorable. And so now you have all of these hedge funds are underperforming the market. So what you want to do is you want to have a strategy taking advantage of an inefficiency that nobody else knows about. And you need to know how to properly size that strategy so that the market doesn't sniff it out. So that's why I tell you guys these things like, reading this book. Okay, there's definitely things that you're going to learn in trades, quotes, and prices that's valuable to you. Okay, but I think that it would be pretty difficult for a retail trader to take the things that are in this book and turn that into an automated strategy and just straight up start making money from it, right? It's public information already. It's stuff that Wall Street has known and has been utilizing in their trading for decades, right? The Kyle model, the one that I was talking about earlier in this session, that was published the year I was born. Okay, I'm almost 40. Well, I'm 38. Okay, I'm almost 40. Can you believe that? We're talking about a study that was released almost 40 years ago. So you think that the market has probably taken that out yet? Yeah. But that becomes base, not edge. Base. It's things that you need to know to be competitive, right? But then you can take that information and it kind of tells you where the best places to start digging might be, right? It kind of puts you on a different level. The kind of research that, because most retail traders are just like, well, I see this pattern. Let's see if I can keep track of it so many times and see if it goes this way or that way, right? But now we get to a new level where we say, oh, okay, you need thousands of data samples, and the market tends to wash out inefficiencies. So what I need to do is I need to find an actual inefficiency that leads to some sort of a statistical behavior that the market hasn't already figured out and doesn't have a whole lot of competition. And these are the sorts of ways that people have found these sorts of market microstructure inefficiencies in the past. And so here's maybe something else that we might learn that seems like could be possible based on what I know, but there hasn't been a study about yet. Right? Or think of it as you did your graduate work in market microstructure, and now it's time for you to do a study and write a paper. What would you do it on? Right. So yes, you have to develop your own strategy. That has always been the thing that I've been and you go back and watch all my YouTube videos. That's what it's all been about, is me trying to teach you not the strategy, but how to develop your own strategy, right? Now, the split side of that is that this all results in a market that is very statistically efficient, but it also results in a market that is very informationally inefficient, right? We know what the jobless claims number was, and we could, what should the fundamental value of this asset be based on that? I don't have a formula for that because I know that doesn't really work for where the market is going to go. But you could, I think, pretty straightforward look at how would this affect the economy and what should the price of this asset be, right? But we know that the market will never go to that point, right? But there can be more extreme dislocations than that. For instance, right now, the market is pricing 5 rate cuts next year. It would be absolutely unprecedented for the Federal Reserve to reduce interest rates 5 times unless there was a recession. And I think that them doing that would be extremely likely to lead to inflation if there's not a recession. And it's also very much out of line with what the Federal Reserve themselves have said, where they're kind of suggesting that they're going to keep interest rates where they are for a long time, and then maybe at the end of 2024 reduce interest rates once or twice, right? So we have a situation where the market, because of the CTAs and all of the other orders and things like that going on, where the market is very far away from what would be fundamental value. They have to claw back at least 3 interest rate cuts in the pricing of interest rates. Okay. But in order for that to happen, there has to be orders coming in, right? So here we can identify a situation where the market pricing is incorrect. It could potentially provide opportunities for us, right? Or rather, you could say there is information that you know that can potentially predict future orders and is not properly factored in by markets. So it's easier from that. My conclusion is this: it is easier to build a strategy based on informational asymmetry than it is off of technical analysis. That's my conclusion. Right? Think of it as a gold miner hitting a gold vein. You exploit it, it decreases. Same with your edge. As you exploit it, it decreases. However, deepening your lot size, it can actually outlast you. Yeah. Well, you'd have to think of it as like gold is some sort of resource that constantly renews, right? You would want to limit the amount of it that you're taking out so that it continues to grow at a good pace or something like that, right? Like if I'm a forester, right? I don't want to just like absolutely cut down every tree that I can possibly find. And I want to cut down trees sparse. You gotta leave some trees behind, and you need to know the correct amount to cut down so that the forest can rebuild, right? But going back to the gold analogy, if you've come and you're going to go and pan for gold, where are you going to go and pan for gold? Are you going to go to the most popular gold panning location in your area? Probably not, because people have probably already panned all of the gold in that area out, right? You're going to want to go to a place where nobody's been and that has the conditions that you know are where gold tends to be made, right? So that, you know, the geologic formations and the types of rocks that are around there are the types that you will find gold in. And you want to go into where the river bends, because those are the places where the heavier sediments will kind of, where the flows will kind of slow down. And so those heavier sediments will settle there, right? So what are you doing when you're panning for gold? You're trying to predict where the gold is going to be. You don't just go randomly anywhere. And you don't just go where everybody else has already been. Which is why most people during the gold rush didn't make money, right? It's like, yeah, there was gold there, actually. My understanding is there was gold there. It's just that there wasn't enough gold for as many people as were out there trying to find it. Yeah. I'm glad, Tactical Tenacity, that you find this very interesting, because this is the first thing that I'm trying to get people to understand on this channel. In order to stand a chance, I think you need to understand that first. Right? Now you know where to look. Now maybe you actually stand a chance of finding something, right? Thing that is frustrating about it is because a lot of people don't want to understand it, right? Because they believe in technical analysis. And what I'm saying basically says technical analysis isn't very effective. I used to say, well, technical analysis totally works because look at these people who made money from it. Like, I would always cite Jesse Livermore as, you know, he had huge success in the markets, and he claims that it was just pattern recognition and stuff like that, right? Well, now I understand that maybe he was, But then he became famous and the market singled him out and made him go bankrupt like 3 times. So probably he was taking on a lot of risk. Maybe he did have edge, but that edge kind of disappeared as time went by. And in the end, he killed himself, right? So he's not actually an example of like technical analysis works. Now I realize that, oh yeah, actually there probably are situations where certain types of technical analysis work. It's just they don't work anymore because we arbitraged those out of the market already. The edge is already gone. As a whole journey, the way I found this channel was when I stumbled upon order flow / reading the DOM, and it just made sense. Yeah. Because when you understand the DOM, it's kind of like, how are you to understand what's going on in the market right now without being able to see the DOM? Without being able to analyze the orders and seeing which prices the market orders are going at and how much absorption there is against that and what the limited orders are stacking and canceling and stuff, you can't actually explain or understand what the market is doing and why it did what it did. You just can't explain it with your typical price and volume chart. You can't. But, you know, the way that I went is I got into the DOM, I saw that, and I was like, okay, cool. And then what I tried to do is I tried to apply technical analysis to the DOM. And I mean, I guess I had some success with that, but in the end, I realized that, like, oh, you know, those edges probably arbitraged away by the robots. So it doesn't mean that it's useless to you. You still need to use the DOM to be able to understand what's going on. But if I'm going to find an edge, it needs to come from somewhere else. And so the way that I do that is by looking for informational inefficiencies, and that just changes every day. And that's why I can be able to find edge every day, and I don't have to worry about it getting arbitraged out of the markets, because or even talking about it on YouTube, because I'm confident in my ability to understand what the market is doing and what the narrative is right now, and interpret it, you know, better than other people, right? Yeah, I started with technical analysis, but it only made sense like 10% of the time, and other times it felt random. You know, the thing that I think is so funny is, like, people say price doesn't lie. And I'm like, look, if I was constantly sitting next to you, giving you advice, and my advice only worked 53% of the time, would you keep listening to me? If what I said was just an outright lie 47% of the time, would you still listen to me? I don't know, man. Because that's the thing is when you get in, like, really get into backtesting these things, you'll backtest it and it'll be like, oh, you have a 53% chance of winning or whatever. Let's say that you have equal risk reward, and then you have 53% chance. So that's actually significant, right? But is it significant? Like, that's 3%. 3% over 1,000 trades is only 30 trades, right? Or I guess 90 trades. So it's 3%. And if that's only within a year, then what actually is it over 5 years? And over 5 years, then you're going to find out that over 5 years, that 3% isn't large enough. That then over 5 years, then it gets washed out, and it's not statistically significant anymore, right? Daily range is enough to make... Well, no. Okay, so the issue with that, you can make money from volatility. We could, as futures traders, we could just come in and fade ranges, right? Gets to the edge of a range, I can see a little bit of pushback, and so I go against it and expect it to mean revert, right? And you can do these things where it's like, okay, the range is like a 6-tick range, so I'm going to have a target that's only like 4 ticks and a stop that's like 8 ticks, right? So now it's very likely that if we stay in that range, that my trade will be a winner. And they will have to break out of the range against me in order to stop me out of the trade, which is very unlikely. And so I'm going to have a very high percentage chance of winning, right? Because the market has to go further in order to stop me out, and it's going to do something that is less likely, we think, okay? The problem with that is the fat-tailed nature of markets, because what we're doing is we're saying when we lose, we're going to lose twice as much, which means that our win rate actually has to be absurdly high. And if we come into a period of the market where we lose over and over again, we have a bad losing streak, then that's just going to wash out all of our profits. So what that means is you can make money from taking on risk. That's what you're doing, is you're saying, you don't know what's going to happen. I don't know what's going to happen, but I'm willing to take a risk on what's going to happen because usually nothing happens, right? I'm going to take that risk, and you can make money. Making money off of risk alone is the easiest way to make money in the short term, but it is not long-term profitable, not on its own. So what you actually want to do is first you need to develop an actual real edge, something that predicts what the future orders are going to be. And then once you've done that and you're really confident about it, then you can add on risk as a way to sweeten the strategy. But, you know, because you could just, your strategy, an easier way of looking at it is you could just always sell options. Whatever the options are, just always sell puts. Just always sell puts against the stock that you own, right? But what you're going to find is then one day, once in 5 years or whenever the next recession comes, all of the stocks are going to go down, and you're going to be forced to sell the stock, and you take these big losses that are larger than what you were making from selling them every month. And this happens. So you get these firms that they were successful for a long, long time, and then just one day they blow up. And like, that's the whole thing is like, again, if you're coming in and you trade and you make money every day for every day for a year or 2 years, you're very unlikely for a retail trader to do that successfully for 5 years. I've never seen that, but so that's why I always say 2 years. Okay. You do that every day for 2 years, and then one day you blow the whole account, then you didn't actually make any money, right? You just wasted 2 years. So you need to have an actual edge, I say. Don't waste years of your life by, being lazy. Like, find something that you know actually has an edge. Or at least be actively seeking to find edge, right? Okay, well, where was I? Oh, it's 8:11. That went by pretty quickly today, didn't it? So kind of feels, the treasuries are selling a little bit again. This sell looks a little bit more significant, especially in the 30-year. The 30-year is actually below the open now. So that might be something, but I'm still kind of leaning towards that the treasury market is really difficult until we go away. Tomorrow, don't miss tomorrow, man. Non-farms is going to be insane. It seems like every non-farms is a big deal, but I'd say this is probably the second or third most significant non-farms payroll since the financial crisis. I think when we can see it in retrospect, the really big one was that one right after the pandemic where we had this huge jobs gain rather than a loss that we thought we were going to get. That was insane. That day, oh mama. Markets moved so far that day. That was crazy. The one that was wild about that one was that the S&P 500 didn't really react too much off of the initial report. And then when they opened up, then it was just trend day. Ooh. Big winners that day. And I made money off of that too. But what would be the second most? Want to say that there has been some where there was a lot of volatility pricing going into it because we were unsure what it was going to be, and we thought that that print was going to be particularly important as to what the Federal Reserve was going to do next, right? This time around, though, I think that this one becomes very closely watched because we've had so much movement off of the weakening data. So if we get a big miss tomorrow, not as many jobs as expected, yeah, this market's going to do wild stuff, probably. It might be short-lived because I think everybody's already long, but it will still be very wild. I wouldn't recommend, and I say this, listen, I mean, I don't know your personal situation and everything, so I can't consider this financial advice, but I would strongly advise people to think twice about trying to hold a position on through non-farms tomorrow. We might do it here on a sim account as a part of a degenerate kind of, let's see if we can guess what it's going to be sort of a trade, but there's some of these are just too big to play that game, and that's going to be the case tomorrow. It's going to be an S tier event. It's going to be nuts. If you were to make a roadmap for someone finding edge to going live, what would it be with realistic timelines? Well, I don't know what the timelines would be. I think one of the things I've found is that there is seasonality to the markets, and you kind of have to go through that 2 or 3 times before you get a hang of what that means. And so I think that it takes at least a few years to really get yourself in a place where you're going to be solid. But if you go to the website, speculatorseth.com/strategy.html, and this was a PDF that I made for a video where I talked about the essential elements of a strategy. And that's a multi-page PDF document that tries to go into detail about all of these things. I think one of the things that I did in that I'm really proud of is that I was able to go into how the stylized behavior of markets can affect how you potentially want to trade, like some practical guides as to how to use those in determining your trading. And that it basically goes into like, here's everything that you need to know. It also goes into like common macroeconomic environments and the correlations that you see in those. And it also goes into developing it. By the developing it side, I can already tell you, right? It's just, that's simple to describe, right? Is you have to come in, read as much news as you can, watch the order flow, see how the markets are reacting to things, and just consume that information and let your neural network, the frontal part of your brain, sort it out over time. And if you're watching the order flow and you're watching the things that are driving the orders, like the news and so forth, and strategies in the markets, read order flow reports. There's these reports from like John Flood and these other analysts that Zero Hedge often posts, right? Read those. And your brain just kind of stores that information, puts it into a network in a way that, works. And if you have this guide, all of this information that I have, what it really is for is to help guide the development of that model for you, right? That's the reinforcement learning part. If you are building a chat GPT, you take all of this data and you crunch it into it, right? But then if you just do that, it spits out nonsense. So then what they do is they ask it a question and it gives back 3 responses, and then they have a human say, this is the response that was best, right? So you have to have something that knows the answers, right? So we have this information about market microstructure. We have this information about macroeconomics. And those are kind of like the answers that can kind of help us guide our mind's interpretation of what's going on, so that the model that we create is much more likely to lead to profitable trading. Seth, are you still with EdgeClear? My platform is hanging up on... Oh, which platform? Yes, I am still with EdgeClear. How do I upgrade the RAM in my mind? I don't know what the RAM in your mind, what determines... I bet you that Alex... Who is it? No, I can't remember the... Huberman. What's this? His name is Huberman, right? I bet you that there is some video there about memorizing things. But if our brain is a neural network, a collection of cells that are connecting together in a certain way, and the information that we pass into that neural network affects how we think and the result that we get and how we're going to trade, a key part of that would be to be healthy in order for that neural network to perform at its best. So there's some research going on. I was reading about this morning. They're doing some research about the blood-brain barrier. Basically, there's like this barrier, semi-permeable barrier between your bloodstream and your brain that is there to prevent toxins from getting into your brain. And they've found that this, like issues with that blood-brain barrier seem to be correlated with Parkinson's and those sorts of diseases, right? The things that make you go crazy when you're older. And this new research was on bipolar disorder. And basically they took people that had hard to treat bipolar, like they've taken medications, it doesn't work. And they gave them metformin. Metformin is a diabetes drug that basically treats insulin resistance, which is when your body doesn't really respond to insulin anymore. And this eventually leads to diabetes. Okay. And in this one study, obviously would need to be replicated and all that sort of stuff. But in this one study, they found that treating the insulin resistance with metformin resulted in an improvement in their bipolar symptoms. Isn't that crazy? So yes, your health and your metabolic health has a significant impact on how sharp you are, your brain. Not to brag, but people tend to tell me that I'm pretty smart. I think I'm pretty smart. I only think that because people tell me that. Because I go and I do things and I solve problems that most people can't. A lot of the people that I work with, they're smarter, or even smarter than me. We're all in computer science, but like most of the population, they can't do that stuff. How do I do that? Well, I think that there's two things. One is you got to practice, right? So I'm constantly trying to do these, problem solving, complicated things. And two, I stay fit. I work out. I watch what I eat. I don't eat a whole lot of outright sugar. I make sure that I keep my cardiovascular fitness up. And that has a significant impact on your brain, especially as you get older. And that's an important part of this too, because for retail traders, success in trading might not come until you're older. When you're more established and you have a greater ability to take on risk, you have more capital to work with, and you know more about the market. But then your mental health starts to decline because you're not working out. You can be healthy. I'm bipolar, and I'm always reading about the new treatments in non-traditional medicine. I got turned on to this by somebody on TikTok, and they were saying that this is probably like the most significant research of the past decade, like that people in universities will be learning about these studies and so forth. I think so. I think the biggest advancements that we're seeing in health right now are one, understanding that your overall fitness has big impacts on other parts of your health, including your mental health, and also that your gut flora has significant impacts on the rest of you as well. So what you eat really matters a lot. If you're just eating trash and sugar, it really has a significant negative impact on you. I think I got lucky in that respect, because we never really had sugar in the house when I was a kid. It really bothers me that we have sugar in our house, but there's not. I can only do so much about it. Basically, I'm saying I think sugar makes you stupid. So way oversimplified, but I don't know, that decline that we had down to 28.5. It looked pretty good, but it looks like they're retracing it without much issue. Nothing too significant here, though. I definitely, it would be really hard for me to justify taking a trade after we're watching it basically do nothing the whole session, right? Probably it'll be constrained until tomorrow. Oh, you're not on? Well, you have to say something. I don't know where you are. You have to say something in Discord so that I have a name to click on. I had a good chocolate. Well, there could be some positive benefits from chocolate if there's not a lot of sugar in it. Beef does the body good. I have to go back and look at that. My understanding. There you are. Oh, there you are. Yeah, how do you not have... Oh, yeah, there you go. You should be able to post a picture. I think that too much beef can be a bad thing. I don't think that beef was ever intended to be like our staple food. You know what I mean? Beef and fish and pork and chicken. Yeah, the whole thing of fish is really interesting to me. That's one of those things that gets me thinking. See, you heard of this whole theory that humans are actually aquatic apes? We're the aquatic ape. We're the ape that evolved to survive in semi-aquatic environments. So what we're actually good at is, wading around in the water and spearing fish. Now, that's just a theory, and there's a controversial theory at that, and there actually is a lot of pretty good evidence from an evolutionary kind of perspective that kind of contradicts that theory, but I still find it really interesting. It seems like, for instance, the Mediterranean diet, which includes a lot of fish, seems to be a very effective diet, and there's lots of things about that diet that work really well. And fish-based diets and having a lot of omega-3 in your diet is important, and fish is one of the best ways to get that omega-3 in your diet. I should eat more fish. Fish has not been it used to be. I would go to the grocery store and there would always be some fish, and you'd kind of get it before, when they start discounting it. And now they don't ever. Now it only gets the frozen vacuum sealed stuff, which usually isn't as good. So I don't know what the deal is with that, but yeah, I've been trying to get my wife more on a Mediterranean diet because it seems to me that she's got insulin resistance problems. I've narrowed in on it. And I think that's her biggest problem. She's on some medications that help her with that, and she has been losing weight now. And performing better. And I got a cookbook that's like a Mediterranean cookbook, but we've only eaten like one thing out of it, so I should start harping on that again. I don't know. Maybe it should be that I just cook the food, but then I think I don't really. I do the working out. I work out, she cooks the food while I'm working out, and then I'm done. And that's all. But I haven't been doing the best at working out. I worked out great on Monday, and then I had to skip yesterday because the kids. I'm definitely not going to miss today, though. Because I want to stay on track. I want to get built back up and be peak fitness again. I do feel like it comes back pretty quickly. There's a lot of liquidity sitting there at 31.5 and 11. 3Ks sitting there. I think those orders might be genuine, though. I think that they actually want to be filled. You get really good fish from dirt from Alaska. Yeah, I don't want to live in Alaska, though. And we live in Utah. They don't really ship that stuff here. Too far inland. So what I want, so I one of the things, this is like the pinnacle of first world problems that I'm about to describe to you. And that is that when you've been successful and you've met your goals, then what do you have to live for? You have to make new goals and stretch for new things, right? And, when I bought this house with the idea that, we'll live here forever. And eventually our income will grow and there will be inflation and so forth. And so the cost of the house will be a smaller percentage of our home, and we can invest and build wealth that way. And now that I'm to that point, I've been in the house more than 5 or 6 years, and my income has gone up with the inflation and so forth. And the payment on my house is a much smaller percentage of my income and so forth, and I'm saving a ton of money away. I want to move. It's the new dream. The new dream, I want to live up in the mountains, guys. Like right next to a ski resort. So there's this place. This shouldn't be interesting to me, but it is. It's interesting to me. There's this place a little bit north of me here where these guys, I don't know how they got this hold of this land, but they purchased a huge slot of land over there on the backside of the mountain. And they want to turn it into a private ski resort. So they already have like 3 lifts over in there. And if you have paid the membership fee, which is reported to be $500,000. $500,000. And I don't know if that's a recurring fee. I think it's just a one-time fee. They plan on building a couple of houses. Who knows how expensive those houses are going to be, but it's probably like the cost of your house is going to be wrapped into that fee, right? And then you have access to this private ski resorts. Now, the local people in the area aren't taking too kindly to that. They feel that it is changing the character of the area, and they don't like the rich people taking this huge slot off the mountain and turning it into a private resort and whatever. And I totally understand that, but at the same time, I'm also like, this is going to bring a lot of money and business to your area. Like, you realize that, right? Because you're basically creating the billionaire private ski resort with like a couple hundred houses in it, right? And I want to live there. I think that's the ideal thing, is to live there right on the ski resort in the rich people neighborhood. And, I bet that most of my neighbors won't be around most of the year. I'll live there full time, but most of my neighbors won't be around. But when they do, it'll be Elon Musk and all of the hedge fund guys, next door. Yes, that's what I want. Want to live there. And I kind of don't care about all of the arguments about whether it should be there or not, because I want to live there. Breckenridge is very similar to what you're describing. It's gorgeous. Yeah, what's the name of I forget what the place is called. Let me look it up here. It's called, so we're over there on Thurston Peak, I think. Wasatch Peaks Ranch Ski Resort. They have a website and you can do inquiries. Maybe if the right things happen in 5 years, I could live on Wasatch Peaks Ranch Ski Resort. And if I don't live at Wasatch Peaks Ranch Ski Resort, then there's another development that I think will be a public one up in Eden that is also being fought very vehemently against by the locals, but I think that they will probably lose in the end. I could live in Eden. And then you're right, you're kind of in the middle of Snow Basin, Powder Mountain, and Nordic Valley ski resorts. I could go to all three and ski. I'd also probably need to get ski equipment again. I haven't skied since I was a teenager. You should move to Sudu Sopa Town by Kenny. I would rather stay in Utah. So before this, it was like, maybe I'll go and get a spot, find a place in Park City. But real estate values in Park City are already super high. Right? So I'd rather build in a new place and somewhere where I could build it, right? So that it meets my needs. So I want a bigger closet. I want every room to have its own bathroom and shower. I want a larger pantry. I want like a larger garage. Or if not a larger garage, a shed, like a heated shed in the back that I could have like my weightlifting equipment and then like a wood shop or something like that. And maybe a pool. Yes, so this is the new dream. It was kind of like I had the dream and I did all the things that I wanted to do, and now I need new things to dream about. And it's kind of like, well, now I kind of feel like I have to dream about having the things because I already did the other stuff from the other perspective, right? Ooh, and I'd want it to be part of a community, because that's the big thing. It's like building a community. Very important. Very important. Maybe from that perspective, I wouldn't be very happy at a place like Wasatch Peaks Ranch Ski Resort, because if most of my neighbors are only there a few weeks out of the year, that's probably not the best community, right? $500 membership fee is crazy, right? Well, it really is like, we want this to be the billionaire ski resort. It is kind of a little bit like, why would you do that? I don't know. Maybe if that's because you'll make more money that way, maybe. His taste different is. Oh, I totally believe that. Yeah, I know that's the case. You definitely get better fish in Washington than you do in Utah, I tell you what. There is one place here in Utah where the fish gets transported in daily, and it's about as fresh as you could possibly get it here in Utah. And it's a big deal. And you get better fish from them than anywhere else. I haven't been over there in a long time, because it don't work downtown anymore. Well, let's see here. Oh, that was only 10 minutes. If Dear Reddit, should I try a prop firm now? Probably not. Don't you have lakes and rivers in Utah? Yes. That was the other idea. There's Bear Lake up north, and it would be nice to have a place up there. I think, though, that if I was going to do that, I would rather make like an Airbnb. So it kind of depends on what kind of internet I would get too, right? Like, if I get in a place where I got fiber internet, then let's just live there. But if I can't keep my fiber internet, maybe I just turn it into an Airbnb. I would love that. They make these properties up there that are intended to be like a multi-family destination where you know, like all of the grandkids can come or something like that. I'd like to have an Airbnb like that. Oop, journalist killed by Israeli tank. That's not good. Oh, Reddit. This has nothing to do with anything about the world or trading, but honestly, a remaster/relaunch of Unreal Tournament 2004 and Unreal Tournament 99 would be amazing. Yes, it would. Like a StarCraft remastered version. Yeah. Problem is that UT99, from a multiplayer perspective, I don't think actually holds up very well. For pros, they love that shit, but most people would despise the way that the game is played now. 2004 could maybe be a little bit more workable. Keep everything just like it was, just like updated for modern computers and stuff. Do you like Warhammer? Oh yeah. I hope they do a good job with making a Henry Cavill series or whatever. I'm pumped. I always think it's funny, like Henry Cavill almost surely has a Reddit account and posts on the Warhammer 40k subreddits. Elon Musk almost certainly has a Reddit account and is posting stuff all the time, right? I'm sure that some of these celebrities have stumbled across my content. They maybe didn't completely understand it or completely go into the rabbit hole enough that I would know that they're a celebrity that appreciated my work, but I'm sure they've read my stuff before. And yeah, Henry Cavill probably spends his whole time on the Warhammer subreddits. If I ever earn myself first world problems, I'll go back into gaming. I tell you what, I really miss gaming. I don't miss it as much as I miss snowboarding, but I do miss gaming. But two problems. One, children. Maybe that changes in 3 to 5 years when they're both 5 years old and they can understand games, and then we'll just play games together, and that'll be freaking awesome. It'll be different kinds of games. It won't be the thing that I want, but that'd be great still. We play Minecraft together. So when we were playing Minecraft with my older kids, that was great. But I just don't see the games that I like anymore, man. I need an Unreal Tournament sequel is what it really comes down to. You need an Unreal Tournament sequel and a StarCraft Brood War sequel. But I've been looking at that one like there's a new game coming out called Stormgate that everybody is kind of looking to revitalize the real-time strategy industry and kind of become the new way going forward for competitive gaming for that and everything. And we've kind of gotten some hints, peeks at it now. People are like streaming it this week, and there's going to be another beta in December, and then I think maybe there'll be an open beta like early next year. And it looks like it is a fun game, but it is not Brood War. It is not Brood War. And it's starting to look like that Brood War was one of those unique times in history where, because the previous real-time strategy games that they had were so popular, and they gave the game enough development time, which is hard to get nowadays, their whole philosophy and everything behind it, that you just can't duplicate it anymore. That there'd be no way to make a game like StarCraft that would be popular and successful. And so it seems that nothing will ever quite reach the spectacle that StarCraft Brood War has. But the cool thing about that game is that it doesn't need to be replaced. There's so many of these games that like Unreal Tournament 2004 just does not work on new hardware very well. So it doesn't even have widescreen support. But Blizzard, they did this brilliant thing where they updated the game. So remastered the game basically, and it's on top of the original game. So it's like the same underlying everything. It's just like updated to be compatible with current computers and graphics and stuff. But it plays exactly the way that the game did. And the game holds up incredibly well under new technology and internet speeds and stuff. Which isn't the truth for all multiplayer games. That game is immortal now. People will be playing StarCraft Brood War 200 years from now. I'm telling you, I know it sounds ridiculous, but 200 years from now, people will still be playing StarCraft Brood War. So if I really want to play StarCraft Brood War, I should just play StarCraft Brood War, right? I don't need a new game to get me into that. How many kids do you have? Well, I have 3 stepkids and 2 kids of my own. And they're pretty far separated in age, right? Like the youngest of the stepkids is now is going to go into junior high next year. So I guess that means she's 12. And the 2 younger ones are 1.5 and 3, almost 4. So the problem is that Asher, who is my 3 3/4 year old, is autistic. We're still trying to get him diagnosed or whatever and get him help, but he does not talk. He grunts. He communicates now. It used to be that he wouldn't even communicate. Now he communicates very aggressively. Like when I came home out of my office, he showed me his little, he had like one of those, mini M&Ms. It's like a tube. He had one of those that he was playing with. And he showed that to me. I'm like, yeah, that's cool. And then he's like, no, you have to come here. He drags me over and points. And the lid had fallen on the other side of the little barrier that we have to keep them from going up the stairs. And so so he's like aggressively communicating, but he doesn't use words. He seems to understand everything that we say. He doesn't use words. It's like, well, we have a Switch. I think that more often than not these days that when we're playing it is on the Switch, but I've always been in computer games. I'm one of those guys that like when Halo came out, I just scoffed at it. I was like, this game sucks compared to what we have on PCs. I don't get why everybody loves it. The only reason you love it is because that's all you've ever known. Right? To me, when I'm out with guys and they're like, oh man, remember the good old days when it was Halo and everything? And then I'm like, oh, okay, so you're a pleb. That's what. Quake, Unreal Tournament Master Race is what we're all about. So PC games. And that's the thing that frustrates me is like, especially in shooters, it's like only Battle Royale still. There aren't releasing very many new games. The new games that we do get, there's not very many of them that are like multiplayer focused. And they're just not the games that I'm interested in anymore. So I don't feel like and Epic Games has basically abandoned Unreal Tournament. So I am a refugee, a digital nomad with no home. So I found a new place and I built my own. And it's the trading community that you have here today that you're listening to. That's how it happened. Was I saw that the Epic was screwing up with Unreal Tournament, and I was about to get married, so I knew that I didn't have to, that I kind of needed to shift. So I started pursuing my thing that I had been preparing for years to day trade. It was time to switch. Do something more and make and then I don't think I went into it with the idea of making content, but I made content for Unreal Tournament. So that's kind of where I got the content creator skills from. It's another little kind of push down. That one had a little bit more volume involved with it. The 30 year seems to be selling a little bit harder today, and we are getting some steepening. I can't wait for tomorrow. What do you think that non-farms is? I think it's going to be so hilarious. The most hilarious thing that could happen tomorrow is for the non-farms number to come out, and it, similar to last month, it ends up being a huge beat to, like a Six Sigma beat to expectations, and just hammers the markets lower. They give up all of the gains that they've had this week. That would be the most poetic, most amusing, most ironic thing that could happen tomorrow. So I hope that it happens. But usually when I really want it to be a certain way, it doesn't play out that way. So I think non-farm numbers will be the same as expected. You taking the easy route out, eh? It's just like the martingale thing, right? The best prediction for what price will be in 5 minutes is the current price. Which isn't really a very good estimate, but that's the best you got. Soft landing, no recession. I can hope. R/side hustle. What's a side hustle that isn't oversaturated? Now we'll come in here. Top response. No one will honestly answer this. Lol. And then there's probably a bunch of like deleted posts. If you've never been to r/side hustle, it's hilarious because like half of the posts get deleted because they're just spammers. Anything that involves manual labor. Oh, there's blue collar hustles, window cleaning, trash removal, junk repair, landscaping. Like, yeah, probably is. Especially since a lot of those businesses got just destroyed during the pandemic. Renting giant light up letters for what? So many of these posts are not serious. Pearl approach. Selling on used women's underwear. Okay. Probably could do that. You could probably go and like, so here's my business idea. You create a social, like a one of these chat GPT social media influencers, you know, like a really, really hot chick, you know, make her kind of saucy, and then sell her underwear as part of like her Patreon or something like that. And of course she doesn't exist. So what you do is you just buy new stuff and maybe like spray it with a perfume or something like that. I'm sure you would get people to buy that. I'm getting there is a little bit of like pushiness here. So like they spiked back up here and then got slammed back down. I was hearing some stuff about like reports from Goldman Sachs and stuff like that when that happened, but Nothing that I would think would like directly drive the markets. That business idea is, oh, somebody's already doing it? Well, yeah, but it's probably not oversaturated. At least not yet. It'd be funny. It would be funny. Oh, yeah, I didn't even talk about this. Yesterday, I cleared the old machine. Probably shouldn't have done that. I'm probably going to find something. And I'm like, oh, I should have found this. Like I was just thinking right now. I was like, oh, I don't have all of my bookmarks. I didn't carry my bookmarks over. Actually, I think I can probably still find those. Those would be in documents and settings somewhere, right? But I cleared it out and installed Debian Linux 12. Was it 12? I think it's 12. I'm kind of regretting my choice of distribution. So, like, I come in and I'm like, okay, wait, what's my IP address? Is it still giving me the right IP address because the MAC address is not changed? Or does it detect the different operating system? It was the same one. But, like, you know, so I tried to do ifconfig. Doesn't have the command. Try to do vim. Doesn't have it. Try to do... So I was like, I couldn't do effing anything. It didn't have... So then I'm like, oh, okay. I got this installed. I got this. It did have Python, but it wants to do a centrally managed environment, which means that I need to have an environment manager, which is for us in the data science world would be Anaconda. So then I'm trying to install Anaconda, and they're like, okay, so first you have to use curl to pull this library down and stuff. Okay, cool. Curl's not installed. How is curl? How do you do anything? How do you do anything without curl? I mean, you have apt-get so you can install it, but my goodness, guys. What is going on over there in Debian? Did I do something wrong in the installation and just didn't install anything or something? Because it's got literally nothing on it. And I'm not liking that just because I don't want it to be a pet. I don't want the computer to be a pet, right? I want to be able to like wipe that machine and bring it back up really quickly, and or get other machines that are configured almost with the exact same software very quickly. So maybe that means that I need to go get this different operating. No, I'm talking about Linux. Installing Linux. But it's installed. I went and I did that, and I got our Discord ban robots working on it. So the next step is to install Kubernetes and then make that work with Kubernetes. And then we go and we get the speech translator thing that reads my voice and transcribes it. And we get that working in Kubernetes. And then we make something that sends requests. When I say talk, it sends it to ChatGPT, and ChatGPT does something with it. We're getting there. Maybe we'll see how far I get with that this month. Before I get too deep on that, I need to write the video about the chair. We need to make a video about the chair. You sound like someone smarter than Debian, really? Oh, why Gen 2? I don't know. Like, the thing was when I did it with Debian, and I needed to... I didn't install the GUI, and I had to, like, install everything through apt-get myself. I was kind of like, why am I not just using Arch? So... But there's this other new Linux operating system where like everything about the system is stored in like these spec files. So after doing this, I'm kind of thinking maybe I should go and use that thing instead, because I don't want it to become a pet. I guess it can be a pet and it doesn't matter because the work is actually going to be on Kubernetes anyways. And that should be able to be like, I can transfer it over to the cloud if I need to. Ooh, they're actually maybe making a little bit. Are they going to break out here just before we go? I'll give it another few minutes. I know, I went to, so I was always a Red Hat guy. But from what I've read, Red Hat has gone off the deep end and we don't like them anymore. So, wasn't going to do Red Hat. I don't remember why people have turned against Ubuntu. Maybe I should have done Ubuntu. That's what I usually do. But basically everything that I had been looking at was basically like Debian has become the distribution now. So I went towards that, but I found it so frustrating how difficult it was to get things going. The one that really bothers me is that like the text goes all the way to the edge of the screen. It's not like it goes off the edge, but there's like no padding between the text and the edge of the screen. And I find that really grating. And I can't figure out how to change it and create a border around. And when I search for stuff about that, I'm not really finding anything. So I find that really frustrating. It kind of sounds to me like Debian has made some changes that are very much not what I'm used to, I guess is what you would say. And so that's frustrating for me. It's changing. But that's always been one of the things that's kind of cool about Linux, is that they're not afraid to make bold changes that upset the ecosystem. Kind of an advantage for them. Oh, yeah, they didn't quite go, so I think maybe it will go after I leave, but it's time for me to get going. So I will see you guys. Big event tomorrow. Be prepared in the meantime. Stay excellent, team.